Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Monday, October 22nd, 2018. So today the spiders, the S&P 500 down slightly on the day. You can see we've been really choppy today. This is the intraday 10-minute chart. This is just today right here. So you can see this is Friday's action. Friday we had that nice gap up and go. Big surge up, but look at the pivot point we hit. I love technicals, folks. If you don't believe in technicals, honestly, you're doing yourself a huge disservice. More money's made off technicals daily than anything else out there, especially the PPT methodology. Look at the pivot low, and then look at the high on Friday. You had a beautiful surge to that high, and then look at the reversal. So that was weak. You can see markets continue to be weak, but the key is you're holding this key level here. So this is the gap fill down here. There's a big gap fill. I said to the intraday stock chat today that that was the level that I thought the markets would at least hold for the good portion of the day. And you can see the gap fill here, and then the next day we opened up here. It's a little hard to see. I can zoom in a little. Here's the close. Here's where we open the next day. So there's this big gap right here. Today you can see we inched down right into that. We then kind of came close, making a higher low, and then again we're hovering here. We haven't made a higher high yet though, so you're creating a triangle, which again at some point we're either going to break down or break out of to the upside. As far as I'm concerned, I'm going to favor the upside in the short term. But really, this is just nonsense. The big money's being made here in Chinese stocks, folks. And I want to go over the Chinese stocks because I am a huge fan. In fact, if you ask any member in the research center, even in the options, they'll tell you that I have more trades out long on the Chinese names than anything else out there right now. And again, just in the last week, I've really been accumulating heavily on Chinese names, and I want to show you why. All right, first off, weeks ago, my partner Nick and myself, we came out and gave you guys a master level on the Shanghai Index. Master level, folks. All right, here's the FXI. Thursday night of last week, we hit that master level just below 2,500 on the Shanghai. That was my signal. I went long FXI calls, which, by the way, I closed out today with members for a 50% gain in just a couple trading days. And I also bought the Ying. So here's the FXI. Look up 2.5% today. The Yin, I should say Yin. I always say Ying, but it's usually Yin. Y, if I put the symbol in correctly, YINN. This is a triple FXI ETF. Triple China Bull ETF. Look at this, up 7% today. And that's simply on the major pivot point and knowing ahead of time what the major pivot would be. All right, this is stuff that literally Goldman Sachs pays millions, if not hundreds of millions for finding out. Think about big money with billions, tens, hundreds of billions of dollars. When they find these levels, folks, they literally can make $100 million in a couple days. I mean, it is that big of a level. And here we are giving it to our members in the research center, in the intraday stock chat, and giving trades on it as well. So what do I have? Well, I sold, as I said, the FXI calls, 50% gain in just a couple days. We bought it Thursday. Here's Monday. So it's Thursday, Friday, Monday. Boom, we're out 50%, just like that. Now, I do want to hold some on the long side because obviously I believe that the Shanghai is going to move up. I believe that the Shanghai is going to generally rally now. The U.S. markets are generally going to fall, and they're going to meet in the middle. So what you're going to end up seeing is, maybe the Dow, S&P, NASDAQ down about 15%, and the Shanghai at the lows was down almost 30%. I think they'll rally back. So you'll see the U.S. markets coming down, the emerging markets, especially China, bouncing, and they'll meet kind of in the middle. That's my thought process. And again, we're now up about 10%. We bought this last Thursday. It was up on Friday, now up again today. We're up about 10% on Yin, the triple bull, China bull. But I also have stocks like Alibaba. I love Alibaba, folks. Alibaba's up 5 points today. I love JD. All right, look at JD's beautiful inside bar pattern here. So reversal day here, inside bar, inside bar, inside bar. Now we just need to break this. This is actually one of my favorite charts as long as it holds this pivot low. The inside bar action right here. If you can break the 20, you have a legs all the way up to the 50 moving average, which is just below $28. Think about that. That's basically a $4+ move on a $20 stock, almost a 20% move potentially to the upside on the JD stock here, which is a Chinese stock. I like other China stocks as well, folks. I mean, you could, name off almost any of them. Sohu is another great one. Sohu up today 6%. But look at these things discounted. I mean, these are incredible discounts off recent highs. This was a $70 stock in basically 1 year ago. And look at where it is. Now, granted, you could say, oh, tariffs, this, tariff. Yeah, of course, but the market already knows that. That's what most people don't understand is that the market always brings stocks in based on coming news or expected results, right? So, whether you're having good earnings on a stock, the stock runs up into those good earnings. Oftentimes, you'll get those good earnings and it sells off because it was already in the price of the stock. In my opinion, the worst case scenario for tariffs is basically factored in to a lot of the Chinese stocks. My guess is it's not going to be a worst case scenario, at least not in the short term, meaning that we should get a significant bounce on these things. Now, I'm not saying in 6 months to a year these things aren't lower, but for a swing trade for 10, 20% on some of these plays, it's a no brainer. No freaking brainer right here. All right, and again, the proof's in the pudding. Whether you have Alibaba or JD or Yin or you had the FXI calls as members, we're already in the money. Even with the S&P down today, we're making money on these things, and that's what it's all about, folks. Bottom line is it's about consistent gains, which is what we deliver to our membership base. We just had a live seminar in Tampa just this last week with members learning the absolute intricate parts of GAN in relation to PPT, astrology we were teaching. I mean, it was just incredible. Talk to any member that was there. It will blow your mind. I mean, really cool stuff. This is where it's at, folks. I mean, there's a lot of shady services out there, and, consistently we deliver 80% success rate on trades. All right, you can look at our verified track record, talk to any member out there. That's the way it is. So bottom line is, come take the 7-day free trial while we still offer it. We are going to be doing away with the 7-day free trial because honestly, at this stage of the game, we don't need to give the free trial. We believe that serious investors will hear about us from other serious investors and hedge funds. We have hedge fund members, you name it, we got them here. We're getting to that point where we don't really need to grow our membership base that much. We're happy with successful people that want to be more successful coming to us, and that's the way it is. So if you want a free trial, get it now, folks, because it won't be offered probably by early, right at the beginning of next year. We'll be done with the free trials for our services. So I encourage you again, come join us, get involved. Let's make some money. Take care.